You might be saying, Jason, what is that thing around your neck? Are you going to a costume party? What's going on? Have you become a pimp? No, none of the sort. You can't see the whole thing. So here's the rest of it. Let me introduce you to my little friend, as they say in Scarface.
Say hello to my little friend.
That was a great movie, by the way, from a long time ago, if you don't know the reference. So this is a boa constrictor. Yes, most people don't like snakes. I'm not a huge fan. This is a fake one. But I got this to illustrate a point. You know, we all know what a boa constrictor is, right? What does it do? It goes around its victim and squeezes them. It squeezes them, and then they just die or suffocate, or their lungs collapse, or whatever it does. I'm not an expert at boa constrictors killing people. But the point here is we have a similar situation in the real estate market, because let's rename my little boa constrictor pet here. This is the market constrictor. It's got me constricted. It's choking me. Okay, what does that mean? Well, remember, I've talked to you over the last several years about the poison pill the Federal Reserve has put into the housing market, the poison pill. It is the market constrictor. That's what my little friend here is. We're going to call him the market constrictor. And what did he do? Well, he went out there and he gave people all of these super low interest rate mortgages to constrict the market. And then you got all these institutional buyers, all these private equity firms, hedge funds, et cetera, buying up single family homes. And that problem, by the way, is not as large as most people say, but it's still an issue. It's still a player in the market. And by the way, when I say it's a problem, and when I say the Fed put a poison pill into the market, I don't necessarily mean that's bad. Certainly not for us as investors, right? It's bad for people that want to buy a home, just regular players, regular actors in the marketplace. But for investors, a lot of this stuff is actually quite good for us. So it always depends, like everything in life, what side of the table you're on. But I'm just kind of describing the situation. So the market constrictor here is strangling the housing market, because nobody wants to sell their house because their deal is too darn good. I had coffee with someone this morning, and we talked about how people have 2.6% mortgages. How are you ever going to talk those people into selling? Well, in Biden's sleepy, stupid State of the Union address, he talked about that, right? Or kind of addressed it, right? I mean, listen to this, folks. This is how insane the times we are living in have become. Okay. So the Biden administration is now talking about ways to bribe or incentivize people to sell their home because of the lock-in effect, because of the market constrictor. Not the boa constrictor, the market constrictor. So yeah, they're talking about giving them money to sell their home. If you're willing to sell your home and forego your cheap mortgage, we will give you, what, $400 a month for a year or two, right? That's one of the proposals out there. It's insane. I mean, if you ever doubted what I've been saying to you for the last 20 years, for 20 years, I have been saying to you, the mortgage is an asset. It's a huge asset. Of course, I've been saying that in the context of inflation-induced debt destruction, my trademark term, inflation-induced debt destruction, where you get to pay the debt back in cheaper dollars. It's the secret wealth creator. We all know that. We've talked about it forever. But it's also an asset because during tough times, the mortgage holders are the ones who get all the benefits. They get all the workouts, the short sales, the deals, right? They get all the loan modifications, the reduction where interest rates go way down or payments are deferred, forbearance. I mean, just recently during the COVID era, right? If you owned your house free and clear, did the government tell someone to give you a forbearance? No, only the mortgage holders got the forbearance, right? So use leverage, use it wisely. It's an incredible, incredible thing. Okay, so that's enough of the market constrictor. Just remember, it's not a boa constrictor, it's a market constrictor. And that's what the Federal Reserve has done to the housing market. And this market constrictor is not leaving us for 27 to 28 more years. He's going to strangle us. He's wrapping around the housing market to cause inventory to be low and supply to be short for 27 to 28 more years. Now, I should say, though, the lock-in effect as time goes on will reduce. It will decline in its impact. It's still going to be a big deal. It's still going to be out there because tens of millions of people have these super low rate mortgages. But they do peel off a little bit. And I'll just estimate my educated math here that about 8 million people now do not have the market constrictor. They don't have my snake here, my market constrictor. They are not subject to the lock-in effect because they have market rate mortgages. Okay, so it's about 8 million. When the rates just started to go up, it was virtually nobody, right? But, as transactions happen, and some people will just sell, even if they have that incredible low mortgage, life changes, whatever, they're just, not everybody will keep it just because the deal's so good, right? I mean, certainly it's nice when you can go to a store and buy something on sale, right? You like that. But if you like the item enough, you'll just pay the retail price, right? You don't always get a deal. And so these people are foregoing the deal they have in some cases. And, that'll continue to happen, but that's a nibble around the edges. It's not the main thrust of the market. The main thrust of the market is the market constrictor, the boa constrictor, the lock-in effect. And that's the biggest part of the market. But as we go on through time, it will very, very slowly start to reduce impact because fewer and fewer people will be locked in. Okay, on another note, I want to talk to you about my home for most of my life, the Socialist Republic of California. It is the largest economy in the United States. If measured in GDP, I think it would be the fifth largest economy in the world, right? So you might be thinking, well, Jason, I don't live in California. I live in some other state, one of the other 49 states, or according to Obama, the other 56 states, because he seems to think there's 57 states. Whatever. Or I live in another country, right? We have listeners in 189 countries worldwide. And by the way, I just love that. Thank you all around the world for listening to our stuff. We really appreciate it. All right. This video is going to blow your mind. That's one of the things also that I've been teaching you for 20 years, right? Invest in landlord-friendly markets. If you want to see the complete opposite of that, go to California or New York. This is going to blow your mind. I hope you're sitting down. And if you're driving, be careful. If you're at the gym on the treadmill, be careful, because what you're about to hear is going to blow your mind. Here we go.
Oh my gosh, this is getting crazy. On February 13th, the city of Santa Monica voted to approve a proposal that could change housing in California forever. For you renters and landlords, here are the highlights. This covers all housing, even non-rent control buildings. If an owner increases a rent by the CPI plus 5% or 10%, the owner must pay a relocation fee if the renter chooses to move. If the renter vacates and claims it was due to harassment, illegal lockouts, uninhabitable conditions, or other constructive situations, an owner may pay a permanent relocation fee. I can feel the extortion coming. Owners are required to offer buyout agreements no less than the city-defined fee. If you try to buy a tenant out twice within 6 months, they can sue you. There will be a $20,000 per violation fee. Also being drafted is the inability of a landlord to evict a tenant for unpermitted work on a unit. For reference, the current relocation fees are as follows. For a bachelor studio, $18,250.
Oh my God.
One bedroom's $25,000 and 2 bedrooms plus is $35,000. These stricter tenant protections brings the city of Samo into compliance with new state housing regulations, but it's also going to bring homeowners and landlords underwater. I mean, what do you think is next here for California?
That is insane. I mean, folks, can you believe that? It is unbelievable how unfriendly the Socialist Republic of California is. I mean, look, I wanted to move for many, many years. In 2011, I finally left. And I remember when I moved to Arizona and I drove across that state line, my state income taxes declined by 67 or 69%. And now living in Florida, I have no state income tax, zero. I mean, Arizona has tax, it's just much lower than California. But one way to grow your wealth faster is to stop paying for and spending money on things that you get nothing back for it, right? And so that's one of the reasons to leave these business unfriendly, high tax environments. It may take you a while. You may have to come up with a plan. It might take 5, 10 years. I mean, I wanted to leave California for many, many years, but it took me a while to do it. But I finally did. And I'm really happy that I did because it's just such a better situation. Okay, so inflation progress stalls as housing costs continue to rise. Year over year change in the consumer price index for all urban consumers, that's the CPIU. This is the most commonly quoted, the CPI or the CPLI. This is the most commonly quoted one. And this chart, it shows all items. It shows the core rate. Remember that core rate? That excludes food and energy, which is a complete scam because nobody can live without food or energy. Energy is in the cost of everything. Everything has energy costs built into it. And then the other line on the chart is excluding shelter. And what does this really show us? Well, the Fed is really struggling to get inflation under control, right? Yes, it's made some progress by tightening the money supply, by making money a lot more expensive, and housing amazingly has still appreciated during the most historically sudden and shocking rate increases we have ever seen. Housing has gone up in value, the most resilient asset class in world history, the most historically proven asset class in world history is income property. It also happens to be the most tax favored asset class in America. So it's pretty good. Okay, so look at this. You have got 1.8% inflation rate when you exclude shelter. When you have all items, 3.2, but when you have the shelter in there, okay, and the food and energy, 3.8%. It's just shocking how high that shelter component is in the inflation calculations. So it begs the question, will the Fed really ever be able to tame inflation? This is like taking your fist and hitting yourself in the head. Because think about it. Let's go back to our market constrictor, our boa constrictor snake here, right? The Fed has kind of put themselves in a corner because they caused the lock-in effect during the COVID era with the extremely low mortgage rates. They did that, and now nobody will sell. And when I say nobody, of course, it's a figure of speech, okay? But only 500,000 or so homes are for sale in a housing market that has 140 million in its stock. That's nothing. We have housing inventory 700,000 below easily what it should be to be in only a normal market, not a buyer's market, not a bad market, not a collapsing market for sure. We have a massive inventory shortage that just persists and persists no matter what the liars on YouTube tell you. Well, Nick Girelli, come on the show. Let's debate this. Okay. All right. So they caused that on one side, right? And now they're trying to tame inflation and solve the inflation problem, but they got the lock-in effect where they can't create more housing inventory. And because they can't create more housing inventory, shelter costs, which are a big part of the inflation calculations, owner's equivalent rent, it's called, are just making the CPI much, much higher and making real inflation much, much higher. Of course, the CPI massively understates inflation. I want to talk to you about the labor market. I'm kind of running out of time, so we'll talk about this on a future episode. But one thing to say is that the labor market is booming, right? And it's amazed a lot of people, just like the housing market. But part of this is really for a demographic and structural reason that I have talked about before on prior episodes. So I just want you to know that. I want to make one quick statement on the cruise. Yesterday, sadly, I got a message from our travel agent, and he said there is literally only one room available on the entire ship. It may well be gone by the time I say this. This was yesterday. He sent me this email. He said they had one inside cabin available. That's it. Our room block ended several weeks ago. So these are free floating rooms and prices, and there are suites available. So if you want to go big and you want to have a really nice experience, there are a few of the big suites available on the ship. But on that whole ship, on the Celebrity Apex, on that beautiful ship, there is literally, as of yesterday, only one regular room. Okay, regular price and size room. Everything else is a suite. So unless there are cancellations, that's it. If you want to come on the cruise, just go to jasonhartman.com, click through the cruise website, put your info in, reserve a room. We'll try and get one for you. Maybe there will be a cancellation. Maybe you'll get lucky. But as of yesterday, literally one room available. That's it. Also, for you cruisers, we do have a Zoom meeting next week, and I sent you all a calendar invite on that. So we'll look forward to seeing you there. For everybody else, we do have a Zoom meeting the second Wednesday of every month on a market highlight. So this will be Northwest Indiana today. If you're not able to make it, or you don't hear this episode in time, just reach out to your investment counselor and they can probably get you the recording of today's Zoom meeting. Okay?